Strengthening internal controls to prevent fraud. Introduction. The key takeaways from Day 3 focuses on the importance of reviewing financial statements and cross-referencing key sections. Today's session, Day 4, shows the critical role of internal controls in preventing fraud and ensuring the accuracy of financial records. The goal of today's session is to help you, the business owner, understand how to implement and strengthen internal controls to protect your business. What are internal controls? What do we mean when we refer to internal controls? These are processes and procedures implemented by a business to safeguard its assets, ensure accurate financial reporting, and promote operational efficiency. The purpose of internal controls: preventing fraud, reducing the opportunity for fraudulent activities by ensuring proper checks and balances. Ensuring accurate reporting, promoting the reliability of financial statements by enforcing systematic record-keeping and approval processes. Promoting operational efficiency, streamlining processes and reducing errors by establishing clear procedures and responsibilities. Key internal controls every business needs. Here are a few essential internal controls that your business should implement. Segregation of duties, separate responsibilities for different aspects of financial transactions, e.g., the person who processes payments should not be the same person who reconciles bank statements. Authorization of transactions: require proper approval for significant transactions, such as large purchases or new vendor contracts. Record keeping: maintain accurate and complete records of all financial transactions, including receipts, invoices, and approval documents. Physical controls: protect physical assets, such as cash, inventory, and equipment, through secure storage and regular inventory counts. You must regularly review and update these controls as the business grows and evolves. Areas to look out for. There are many specific issues that could indicate weaknesses in your internal controls. Lack of separation in financial duties: if one person has control over multiple aspects of a financial transaction, the risk of fraud increases. Absence of approval processes: transactions that are not subject to approval or review may go unnoticed, leading to potential errors or fraud. Inconsistent or incomplete record keeping: missing or incomplete records can make it difficult to track and verify transactions, increasing the risk of discrepancies. Weak physical controls: if physical assets are not properly secured or tracked, they may be at risk of theft or loss. It is important that you regularly assess these areas and strengthen controls as needed. Case Study Introduction. ABC Services, owned by Mr. Smith, has been steadily growing, but as the business expands, Mr. Smith becomes aware of a concerning issue. While reviewing financial procedures, he realizes that the company lacks a formal process for authorizing payments. This gap in internal controls could expose the business to financial risks, including unauthorized payments or potential fraud. Recognizing the importance of having a robust system in place, Mr. Smith decides to address the issue before it becomes a bigger problem. He reaches out to one of his employees, who manages day-to-day financial transactions, to discuss the current practices and explore solutions for implementing stronger controls. Example: lack of internal control. So, let's take a sneak peek as to how you as a business owner might identify and address weaknesses in internal controls. I noticed we don't have a clear process for authorizing payments. Who's responsible for this?
Usually, I handle it, but sometimes I just go ahead without approval if it's urgent.
We need to set up a system where every payment is approved and documented. Emphasize the importance of having clear, documented processes for all financial transactions to prevent errors and fraud. A company with solid internal controls. Apple, a global leader in technology, is renowned for its commitment to financial transparency and robust internal controls. The company consistently demonstrates strong performance in its financial audits, showcasing a high level of accountability. One of the key factors behind Apple's success is its openness. Apple regularly publishes detailed, publicly accessible financial statements and reports, which fosters trust among investors and stakeholders. In addition, the company's well-established internal controls and processes are designed to minimize the risk of financial mismanagement or fraud, reinforcing its reputation for financial integrity. Steps to strengthen internal controls. Outline the steps Mr. Smith takes to strengthen internal controls. implementing approval processes establish a formal process for approving all significant transactions, including who needs to authorize them and how they should be documented. Ensuring segregation of duties assign different employees to handle different aspects of financial transactions, reducing the risk of errors or fraud. Improving record keeping require that all transactions be documented with receipts, invoices, and approvals, and ensure that these records are regularly reviewed and reconciled. Conducting regular audits schedule periodic audits of financial records and internal controls to ensure compliance and identify areas for improvement. It is up to you to take proactive steps to implement and strengthen internal controls. Example of an effective control. Here is a practical example of an effective internal control. Establishing dual sign-off for payments. Mr. Smith decides to require that all payments over a certain amount must be approved by 2 employees, ensuring that no single person has control over large financial transactions. Implementing regular audits. He also introduces regular audits of the company's financial records to ensure compliance with internal controls and identify any issues early. Training employees on controls. Mr. Smith provides training to all employees on the importance of internal controls and how to follow the company's procedures. You will see the positive impact of these controls on reducing the risk of fraud and improving financial accuracy in your business. Monitoring and updating controls. It is critically important that you regularly monitor and update internal controls as circumstances in and external to your business are constantly changing. Regularly review the effectiveness of internal controls and address any weaknesses or gaps that are identified. Update controls as the business grows, technology changes, or new risks emerge, e.g. remote work environments may require different controls than in-office operations. Engage employees in the process of monitoring and improving controls, as they are often the first to notice issues or inefficiencies. Schedule regular audits to assess the effectiveness of controls and ensure that they are being followed consistently. Summary and takeaway. Ensuring financial accuracy. Key controls to implement: segregation of duties, transaction authorization, and robust record keeping. Areas to watch: identifying weaknesses in existing controls and taking steps to strengthen them. Monitoring and updating, regularly reviewing and improving controls to adapt to changes in the business environment. Encourage the audience to prioritize internal controls as a key component of their financial management strategy. Let's connect. Contact Peter Adams. Strengthen your internal controls today. If you're looking to bolster your internal controls and protect your business from fraud, Peter Adams is here to help. Contact us for a consultation on improving your financial processes. Stay informed and connected. Follow us on social media and subscribe to our newsletter for the latest tips on forensic accounting, fraud prevention, and financial management.